I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, thanks for having me.
The markets over the summer kind of sideways, but very interesting in that so many people keep telling us the stocks are overvalued. There's not a lot of volume behind the trade. How can they keep climbing if there's nothing behind it?
Well, Jim, that's an interesting question, and I don't know that I have the answer. But the Dow Theory continues to warn. And, you know, I look at the market through two eyes. One, cyclically, and the statistics associated with those statistics. And number two, I look at it through the eyes of Dow Theory. And, you know, Dow Theory is typically something that's more or less in the background that guides me. It paints the bigger picture. But now, at this time, you know, Dow Theory is kind of in the forefront. And what I mean by that is that we're at a critical point, and the Dow Theory, the previously triggered or signaled Dow Theory primary trend change that occurred last June, July, it is still intact. And I know that's a hard concept to grasp for some, and some say that it's, you know, it's debatable, and it's really not. I have the material. I've gone through all of the original writings by the Dow theorists, and I'm 100% confident in the fact that the previously Dow Theory primary trend change is still intact. And if we could walk through that, you know, last June, July, the market moved. The averages, when I say averages, we're talking about the industrials and the transports, because back then that was the two averages that they were referring to in their writings. But the two averages moved below their previous secondary low point, which triggered, that was the first time that had happened, and that had, well, let me rephrase that. That was the first time that had happened with the proper setup to trigger a primary trend change and to mark this 4-year cycle top. So starting from that point, we last June, July, we had the primary bearish trend change, and then we moved lower and moved below the previous secondary low points, and the Dow Theory primary trend change was triggered. Okay, fine. From that point, we moved into the August low. The markets rallied, but neither one of the averages moved above a previous secondary high point. So that previously established bearish trend change remained in force. And then from the highs in November, we go down, and actually we reconfirmed the previously triggered primary or previously established primary trend change, because the averages moved below the August low on a closing basis. And it is the close that counts according to Dow Theory. So as of the January, February lows, they were reconfirmed. And then we rally again. And of course the industrials moved to a new high, but the transports didn't. So it's unconfirmed. And then from the highs in April, we moved down into secondary low points, a higher secondary low point, granted. And from that point, the industrials rally again, but the transports still haven't confirmed. And so until that confirmation occurs, I didn't write the rules, I'm just following them, but until that confirmation occurs where both averages move above a previous secondary high point, the previously established bearish trend change remains. And this reminds me a lot of the 99-2000 period. In, excuse me, in, I think it was September or October the 23rd. I'm not looking at the chart that far back, but I think it was September 23rd, 1999. Richard Russell called the top. And, I mean, and it was a perfect call, going back and looking at the Dow Theory material and the move below the previous secondary low points. It was the perfect call. But After he made the call, the markets moved into a low in October. I'm looking at the charts now, into October. And then the transports began to lag as they came out of that low, but the industrials moved to a new high into January, all-time new high. And I remember people talking about Dow Theory and how it was, a relic and meaningless, and just, I remember the reading the heat that he must have taken. I saw it, but it was right. The Dow Theory was right. He didn't write the rules; he was just following them, and he couldn't control the fact or help the fact that the industrials moved to a new high, but they weren't confirmed, and that was a warning. And specifically, Robert Ray made the comment in some of his writings about Dow Theory. He said, when the averages are in disagreement, they're shouting, "Be careful." And that's what that move, that unconfirmed move, was telling us. Well, if you walk through that period, the Dow Theory bearish trend change then held. And I'm looking at a chart. If you look, the market basically went sideways with false breaks and false rallies throughout 2000. And then as we got into 2001 and 2002, it became obvious. It was a good call. The Dow Theory wasn't a relic, and it all worked out. And the decline into the 4-year cycle low even was fulfilled to the statistical expectation almost to the T, within 200 points. So it all worked out perfectly. And I'm not saying that to say that this time that it's going to work out. I don't know. Maybe this Dow Theory primary bearish trend change is blown out today when we get off the phone. Maybe tomorrow, maybe next week. But maybe it isn't. And it is what it is until it isn't. And I can't, just like Richard Russell, I'm sure, took the heat for that call, and the Dow Theory was questioned then. It's always questioned, by the way. This is what it is until it isn't. So until we see the previously bearish primary trend change blown out, with a confirmed move by both the industrials and the transports, I don't care if this goes on sideways for another 6 months. It is what it is. And consequently, it's telling us, be careful. It's a warning, and this is the third attempt at blowing it out since it's set up. So, like I said, I don't care. If it blows it out, great. If it doesn't, then this may be the time. Third time may be the charm.
Tim, I know it's very hard to predict the timing of events when it comes to the markets because there's so much manipulation, but people are getting a bad feeling about the end of this month. Just like, the last August blowout, the Black Friday, nobody anticipated that, but this time around, people are very nervous.
Look, that sounded like a bunch of mumbo jumbo, I know, but I walk through it. If someone gets a chart, they think about it. I don't know. I'm explaining it as best I can. Let me say this too. Here's another thing we know, but we don't know. Back in 2000, for example, Russell, and I keep using him as an example because he was the leading Dow theorist. He did make the call. It's a fact. It's in print. I've got the material. It was a perfect, again, I emphasize, a perfect call in 99, September 23rd, 99. And in that case, like I said, the market, it was a year and 16 months before the market really broke, after moving to a new high. He couldn't control that. I mean, that's not excuses, and I'm not making excuses for him or Dow Theory. I'm saying every setup is differently. It unfolds differently. And that time it took a while for the thing to break. In 2007, I remember specifically, we were talking about Mac computers whenever we got on the phone, and I'll never remember or forget the moment. In the summer of 2007, I was buying a Mac computer. I was on the doorsteps of the computer place, and the market was starting to break down into the August low. And I remember getting phone calls. I kept having to go out and was taking calls, and people were asking, is this it? Is this it? Is the market? And I'm like, no, we didn't have all of the DNA markers in place. So we need another push. I think this is a decline into an intermediate degree low. Well, lo and behold, that's exactly what it was. We did get the additional push. The Dow Theory non-confirmation and everything set up in conjunction with that additional push into October. The DNA markers fell in place, and in that case, the market unraveled pretty quickly. And then you go back to let's go back to 87, for example. In that case, we got the setup, and it unraveled pretty quickly. If you go back further and you look at some of the other examples where you had set up, say, in the bear market in between 66 and 74, you had, with those counter-trend rallies in 67 and 68, they were kind of like this. They were relentless. And they would set up and try to break, and they wouldn't. They'd set up and try to break, then they wouldn't. But all within the context of that Dow Theory warning. And so what I'm saying is, you're right. We can't control how fast the setup evolves or unfolds. I just know it's there. And then within that, we walk through these windows of opportunity, if you will, cyclically with the structure where things are particularly dangerous. And then either it evolves from there or the can gets kicked down the road and it doesn't. But anyway, I said all that to say this. All of this activity that has been going on since May and into June, July of 2015 has occurred within a Dow Theory bearish primary trend change, and it is what it is. So,
why is there so much effort by governments around the world to push people into equities?
I think one reason is because that's volume. That's, you know what I mean? I mean, it's buying. It's somebody in the market participating in the market to you know, if you go in and if people are participating in buying, then that's an effort to hold the market up. And you know, this thing is held together with duct tape and bubble gum, but it's holding.
We'll have more with Tim Cyclesman Wood right after the break.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's your outlook on crude right now?
Well, you know, I had said that we had intermediate degree top, and we're declining out of that, and we would retest the lows, and you know, now we're oversold. I'm not looking at what crude's done today. I have no idea, actually. But we should be at or near a short-term low in some sort of a bounce, or the opportunity for it, I should say. You know, I mentioned talking about equities, that you go through these opportunities, and when I say opportunities, that's, you know, you get a little cyclical window where you should have a high or a low, and, you know, of course, a bounce or a decline then becomes possible. Well, that's kind of where we're at with crude. You know, we're in a position with the oversold levels where it could bounce. Does it materialize? I don't know, and we need to see it a swing, what I would call a swing low, to confirm that we have the bounce. But any bounce, I think, should be counter trend. And then I think crude oil should continue lower. We talked about gold. I think in the last interview, I think we're at or near an intermediate degree top. I had said that before, and it's still true. We had what looked like the top, and maybe depending on the contract that you're looking at. And now we've had a retest of that top. And if we happen to move back above the high, then okay, fine. I think we're basically seeing a double top type action of an intermediate degree high, and then I'm looking for a correction in gold.
How big of a correction?
We should retest the December low. We should retest the December low, and that's really a little bit more than a correction, but that's what statistically we should expect. So to say that another way is that is the risk, and until it proves that risk is, we get signs of an intermediate degree bottom, a cyclical bottom above that level, then fine. But until we do, we're going to assume that we're going back to that level.
Getting back to transports, one of the analysts that I talked to said he noticed that the transports are kind of like the canary in the coal mine. What you see them do 9 months ago is what's going to happen to the rest of the market now. So if transports are starting to plunge, be ready for the rest of the indices to follow suit in about 9 months. Is there any truth to that kind of cycle?
You know, I can't talk about somebody else's work. I don't look at it that way or through those eyes. So, you know, I haven't done that direct correlation. I look at it from, I guess, somewhat similar, but from Dow Theory, it's more about confirmation, and it's confirmation of the same move of the same degree. And so they are definitely weaker structurally. And so I see what he's saying looking at it through the Dow Theory perspective, and that is that, you know, one of two things is going to happen. Either the transports are going to firm up here and they're going to confirm, and then everything's going to go up together, or, like I said, this is the third attempt, and the industrials are going to catch up, and they're going to catch up in a big way. You know, I don't know what more to say about that, the Dow Theory thing. I had a phone call, and this always happens. I've seen it too many times, but people, I don't know how to explain this. You know, Dow Theory is such a simple concept once you have the material and read it. And I say have the material, you know, I have the original writings. Richard Russell got me some of the original writings from Robert Ray and Hamilton and George Schaefer and all these guys. And until you've really read that, you really don't understand Dow Theory, as simple as it is. But anyway, I said that to say this, is that it is a very, very, very simple concept. But it's so simple that it's often misunderstood, because people think they understand it when they don't, because it is so simple. They read it and go, oh, I got this, when no, you really don't. But I guess the bottom line is that, you know, you have, like I said, a setup that occurs a year earlier, and then someone is still saying that, you know, it's valid. And then you think about it and you say, well, how can an average move to a new high and this still be valid? And so it kind of, in one sense, it's discrediting. And I get that. If you don't understand Dow Theory, you say, well, what good is that? That's trash. It's not. It is a beautiful tool when it's understood, when you understand the concept or the context in which all this stuff is happening. It is a beautiful tool. It's like ancient Chinese medicine type thing. And all I know is it is screaming danger. And like I said, it is what it is until it isn't. And if you know, next time we talk, it may all be blown out, and if it is, fine. Then we're going higher. We're going much higher until we get another setup. But right now, I guess I'm kind of beating a dead horse here, but I just want to reemphasize that I realize, I can see, I'm not blind, and I'm not in denial. I know the industrials have moved to a new high. I get it. I'm looking at the chart. But at the same time, I'm telling you where the Dow Theory stands and what it means.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet, and you can go to our YouTube channel, Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.